Yes, good evening, Mr. Shagun. Welcome to YourPedia.
Yes, sir.
So, this is your technical snap for HPCL for Chartered Accountant Post, right? Okay. Okay. Okay, please tell me what are the concept and conventions of financial accounting.
So for financial accounting, the concepts and conventions which we need to follow is that the accrual-based accounting and the three golden rules of accounting that all assets needs to be debited, all liabilities needs to be credited. So like that, all incomes needs to be credited, expenses needs to be debited. So those principles we need to follow. Other than that, we also need to ensure that our financials are prepared in accordance with applicable financial reporting framework.
And what is the treatment of contingent liabilities in the financial statements?
So contingent liabilities are shown in notes to account. They are disclosed at the end of the balance sheet. That these are the probable uh, expenses where probable liabilities which can materialize in the future. So, for example, if I have to take an example, if we have a court case ongoing against us, and there is a and then that needs to be disclosed. And in case there is a high probability that in future it will materialize, we will also create a provision to meet that contingent liability in future.
And what is the difference between intangible assets and the fictitious assets?
So intangible assets are the assets which are not taxable in nature. These are assets which provides a benefit, economic benefit to organization at a long-term perspective. And if we have to talk about intangible asset, this will comprise of your goodwill. This will comprise of your patents, softwares, assets of the nature which you can't physically touch, but they have your economic value attached to it. While fictitious assets are assets in terms of which are expenses or certain assets which have to be written off over a period of time. This will include your prepaid expenses.
And how the goodwill is calculated?
So goodwill in terms of company.
Yes.
So the goodwill, if we have to talk about goodwill, how goodwill is calculated in case of mergers and acquisition. If we calculate the total value of fund fund given or total value of cost incurred and subtracted with the total value of asset received, tangible and intangible, the remaining residual portion which we paid extra is the goodwill of the company. This is something which we pay to the company because they have a on ground standing in the market. For example, if someone is going to go ahead and buy Infosys for that matter, then other than the value of Infosys asset and liabilities which existed in the book, Infosys also hold a market prestige and belief in terms of people. That is the goodwill which the company have earned, which cannot be measured in monetary terms. But the extra amount paid for that particular portion will be considered as goodwill, and once recognized, it will be written off over the period of time.
Okay. What are the main components of a cost sheet?
So the main components of your cost sheets are direct cost, indirect cost, variable overhead, and your fixed overheads. And from direct cost perspective, it will comprise of your material cost, it will comprise of your labor cost, and it will comprise of your direct factory overheads.
How we allocate the overhead cost to the various segments or say various type of products?
So when we talk about how we allocate the overhead cost, if it's a variable overhead cost, it is charged to the particular job or particular activity in the amount of units consumed. That is how we treat the variable cost. In case of fixed cost, for fixed cost, what we have to do is we have to calculate based on the number of unit produced. We have to calculate taking the higher of the actual quantity produced or or the normal capacity, whichever is higher, we calculate the fixed overhead rate We calculate the fixed overhead rate by dividing the total number of fixed overheads with the higher of actual quantity produced or normal capacity to come at a fixed overhead rate, and then we do absorption. The amount of actual quantity produced is absorbed and charged to that particular product, while the rest is expensed off in P&L.
So while preparing the accounting books, okay. So what is the treatment of CSR activity expenses?
The CSR activities, when we are preparing the financial statements, CSR activities are not allowed as a deduction. Rather, this is a requirement from Companies Act for a company invest on to invest in the uh, welfare of society at large, and it needs to be at a minimum 2% of their net profits. Uh, and it and a company can make a major voluntary distribution other than the CSR activities conducted. And in case for CSR, the budget allocated or separated for CSR, in case all of it is not allocated, then the company needs to create a reserve for that and ensure that it is allocated in upcoming years.
So what is transfer pricing?
So transfer pricing in terms of costing, if I have to pick, so it's a manner how we, for example, at what is the minimum cost where a unit can be transferred to other unit, where and can be used as a measure to assess the profitability of an organization and different segment. For example, you can have one segment which is producing your wool, while the other segment which is taking that wool to produce your finished goods. Now that wool, the initial department which is producing that unit, there needs to be a cost accounting that need to come. What is the minimum transfer price, which is the minimum price at which it should transfer to overcome its cost. And transfer pricing as a concept help organization identify the profitability and the way organization is performing. Sorry, the segments is performing.
Okay, while analyzing a project report, so how to evaluate the financial feasibility of the project?
So, if when we are analyzing a project or when we are considering any kind of expansion of sort, to analyze the feasibility of project, we need to come up with the conservative. We need to use the measures such as net present value. What are the estimated cash flows we expect from that, and and that estimated cash flows need to keep in consideration the estimated factor also, that what is the probability of those cash flows realizing. And at the same time, we also need to consider the capital investment it will require, and for that, how the financing will be sure. And based on that, we need to calculate the net present value. And if the project end up having a positive NPV, that means in long term, this investing in this project is feasible. And just to add one point, sir, the net present value will calculate based on the internal rate of return which the company expects to generate on such kind of investment. For example, if for 10 lakh rupees, I expect a 8% income. Then based on that, the project feasibility will be assessed whether if I invest in this project, I will earn 8% or more. In case it doesn't meet that criteria, then investing in that project is not fruitful for the organization.
Okay, while deciding the capital structure,
Yes.
what is the importance of dividend policy, company's dividend policy?
The company's dividend policy is highly important in terms to say what company is looking from a long-term perspective. When I say long-term perspective, that is, if the company is expecting that it is earning more than the internal rate of return and it is investing in projects where it is a higher rate of return, it should ideally not have a dividend policy which is conservative in nature, because that is something we are providing a better value in terms of capital appreciation to our shareholders. While at the same time, and we can use that fund for reinvest and to grow the company at a larger pace. So that is a factor which we need to consider, like what should be our dividend payout ratio.
And what is the audit procedure of inventory valuation?
So for inventory valuation, if I have to pick the inventory valuation audit, I will divide it into terms of what is the nature of inventory, what is the value of that inventory. Whether if it's a high value inventory, then we need to have a thorough physical tracking. And when we are doing the physical verification, we should pick more samples from that regard. At the same time, for dispersed goods or low value items, we can have a random sampling at a periodic basis that can be done at the same. And one more aspect we can look at is what is the variation and what is the stock, or we can have surprise stock checks to ensure that the stock registers which are maintained are in accordance with what is the stock that is being captured. And to highlight this, one experience of mine during which I noted an article was there were many times the stock in hospitals, the stock officer or the person who have the medicals with them stored, they were just signing hourly entries for the whole day at one go. That means they were not taking proper stock count, which can be which one of the gap we identified.
And how the inventory valuation is done as per the accounting standard too?
As per India's to inventory valuation is done for raw materials. For raw materials, it needs to be done at cost value. For finished good, it needs to be cost value or net realizable value. However, in case where the finished good is valued at NRV, that is net realizable value, then in such case we need to reassess whether the raw materials need to be accounted for at the lower of your cost price or replacement cost. Why? And this is the difference between our India's 2 and ES2 because the ES2 talks about valuation at lower of cost price or replacement cost. However, India's 2 put the burden or put the enablement on fixed goods computation, that how goods are computed based on that raw material cost needs to be accounted for.
So, as a CA, what is your area of specialization?
So as a CA, my area of specialization is internal audit and process transformation.
And what is the difference between internal and statutory auditing?
So statutory audit is a legal mandate as per Companies Act Section 139 for every company to have its statutory audit conducted. And it is to ensure that the financial statements represent true and fair view of the organization's operations. While internal audit is something which a management get it done for critical appraisal of its processes for process review and efficiency. That is the one aspect. Another point is that statutory auditors are appointed by the shareholders in AGM. Internal auditors are appointed by the board of directors. One more point to highlight is that the external auditor, statutory auditor can only be a chartered accountant, independent chartered accountant in practice, while internal auditor can be someone from the management also. It can be a chartered accountant, it can be a management professional also, or some other professional.
So, why you want to join the organization? Why not you go for the self practice?
So, to be very fair and considering how the when to be very fair when how the world is structured and how the things is, I was never had an interest in practice as such. My always interest always lies in process reviews. When I joined CA curriculum as part of when I joined CA curriculum also, and I was introduced to the subject of auditing, it increased my interest in terms of process reviews and internal audit specifically, that how large organizations perform. And I wanted to be part of that. And coming on to the point of why I want to join HPCL. HPCL being one of the largest oil titans of India and a growing company at a very fast pace. It provides an ample opportunity for me to learn and have a career growth in an industry specific domain. Because India is targeting to be a third largest economy. And HPCL as an energy company is going to be a main driver for that. So it provides me with that opportunity. And not to mention, on the personal front also, HPCL provides you with job satisfaction, socio-economic prestige, and good compensation perks.
Okay, what precaution should we keep from the beginning of the recording of accounting books that we can minimize the rectifications or the errors in the our accounting books?
So when we are preparing our accounting books from the very start, we need from the get-go, what we need to ensure is that our accounting is done at the dual paced, that every debit has a proper credit. All income and expenses are properly recorded in the appropriate head. At the same time, one precaution which we also need to ensure and to ensure that there is a rectification done at a timely basis, so that we need to have a periodic reviews to identify where can there a mistake happen and do a proper classification and provisioning for our expenses for our future liabilities also. This is something which we can take, and from the technology standpoint which are available, we can look at the ERP suite. For a small entity, Tally, Busy as an ERP suite can be leveraged, and for large scale entity, SAP and Oracle have this ERP accounting suites which have integrated data. So those can be leveraged in accounting practice to ensure timely and accurate reporting.
Okay, Mr. Shagun, I will conclude here.
Sure.
Because today I asked the question from the beginning. Financial accounting, cost accounting, little bit management accounting, and all the concepts are okay, right? So earlier also your performance is good in our previous snaps also. So just I will advise you to keep this confidence level. Your answers we are brief and simple. Specific answers are there. And in the different areas, I try to ask the questions. So that is okay, miss. Your performance is good. Keep this confidence level and try to revise more about the accounting standards, right? And the forex transactions also a little bit. You have the time, so try to revise the forex transactions also. How to record the forex transactions because the HPCL deals in this because the crude oil they are importing and they are exporting the finished product to 7 to 8 countries or nearby countries. So one or two question may be expected from this domain also. In our tomorrow's mock, I will try to ask few questions from this domain, right?
Sure.